Okay, so like what I said, now the determinants of interest rates was already discussed before. I don't know if it was in financial management or financial market. But anyway, there are changes also, no, that I included here in the determinants of interest rates. Because this time I included or combined the concepts, no, made by Saunders and by Brigham. So there are additional concepts here, no? So bali ganun. Kaya meron pa rin siyang changes aside from those I talked to you in financial market and financial management. Okay, so determinants of interest rates tayo, no? Ay, nawala. Sandali, nawala, no? Okay, so determinants of interest rate. So nominal interest rate, that is the actual interest rate observed in the market. So it affects directly the value of most securities traded in the money market, money and capital markets. So especially for bonds, no? Kung if the, let's say, the interest rate goes up, no, you can expect that the value of the bonds will go down. And then for the capital markets pala, capital markets, you have the bonds and the stocks, di ba? So normally when the interest rate also in the market goes up, the stock market will go down. Kasi people investing in the stock market will go to the fixed income securities. Eh kung bumabagsak nga naman yung stocks, so the way for them to earn is to go to fixed income securities wherein the interest rate is going up. So for the bonds, no, for the value of the bonds, it is directly, no, related to the interest rate. And actually the relationship is an inverse. Kasi pagka tumaas yung interest rate, no, the value of the bonds will go down. And if the value of the bonds go down, that is a good opportunity for you to buy the bonds. Kasi once you bought the bonds, mababa yung price na, no? So yung inyong return will be higher. But if the interest rates goes down, the bonds, the value of the bond will go up. Tapos sa stocks naman, pagka bumaba yung interest rate, people now investing in the fixed income securities because they are earning low, so will now transfer to the stock market. Kaya yun ang mga tinitingnan din natin, ha? And then nominal interest rate, it influences the performance and decision-making of investors, businesses, and government units. Kasi if the interest rate in the market is high, so meaning the borrowing rate is also high. So if it is high, that is not the time that you will borrow money or borrow money from the bank. But it may be good for the bonds kasi if the interest rate is high, lugi rin pala, hindi rin pala, no? Kasi if the interest rate is high, yung bonds, once you issue them, you will get lower amount of money. Eh kaya ka nag-issue ng bonds para kumita ka ng amat, makakuha ka ng malaking pera for your project. But if the interest rate is high, then the value of the bond that you will be selling will be lower. Kaya hindi rin pala pwede, no? Okay, so loanable funds theory. So ito ba na-discuss ko sa inyo dati? Kung nare-recall ninyo? Pero kinumbine ko na kasi ito
Yes, sir.
Ito mga loanable funds.
Sir, this was included in banking.
Banking.
Yes, sir. Same meaning, same content din po. Pero meaning lang, definition lang po. Nakalagay.
Hindi, kaya nga, itong mga to, na-discuss ko itong mga to. Paki-check naman, baka umuulit lang ako.
Yes, sir.
Naka-discuss na po.
Talaga? Dati, sige, tingnan natin yung iba, yung mga hindi na po na-discuss. Tingnan nyo, ha?
Opo.
Kasi sayang naman kung inuulit ko lang. Pero siya yung topic ng investment and management talaga eh. Equilibrium among interest rates. Ito, nakuha nyo na rin?
Yes, sir.
Ito O, sige.
Yes, sir.
Di-review na lang natin. Diyos ko, ito.
Yes, sir.
Ano ba yan? Nahiya naman ako sa inyo. Sige, tignan natin ha. Meron ditong iba. Ito palagay ko, hindi nyo to alam, no? Kasi,
Sir, wala po yata yan.
ito wala.
Opo, wala po yan.
Ito. Ito o ito? Sige, dito tayo, Fisher effect. Pero you will be responsible for the concepts already, class, ha? Pagka ganyan, ha? Okay? So, yung mga computation actually dito, may computation dito, class. Ay, ang mga yan. Ito nga
Sir, baka review na lang po natin.
Sige, review natin, ha? Yung concepts, kayo nang bahala. Doon na tayo sa formula.
Okay, sir. Thank you, sir.
Ito, kayo nang bahala sa mga yan, ha? So, dito na tayo ulit. So, again, yung formula, dito na tayo sa maiksing, ayan, yung ating formula, ito. Basically, this is the formula that we have, yung R. Ayun yung magano. Dapat siguro i-Google Slides ko siya. Hindi ko masulatan eh. Sandali Yan. Para masusulatan ko siya. Ayan. Hindi rin pala. Ayaw siya masulatan. Ay, nako. Anyway, so yan siya, no? Hindi ko masulatan klase. Sandali. Para makikita nyo rin. Ayun. Ayan, may pang-highlight lang. Anyway, ito yung formula natin, no? Yung R. So, ay, nako. Ay. Yung R natin dito, ito palang R na to, is actually your nominal rate. Ay, naku, ba't lumilipat? Sorry class, naglilipat-lipat. Balik na lang ako sa kanina, ha? Lumilipat-lipat siya eh. So, di ba ito? So, itong R natin na to, no? Again, that is the nominal rate. So, every time we compute for the nominal rate, these are the to be included or inclusion. So, yan ang mga inclusion natin palagi. Okay, but that depends if it is a government, security, or government security or corporate security. So, depende. Depende kung corporate security yan or government security. But these are always the things to be included or the variable to be included in the computation of the R. So, ito yung R nga natin is the nominal rate, which is also the required return on a debt security. Tapos yung R star naman is the real risk-free rate of interest. So when we say real risk-free rate of interest, that is the interest in the absence of the inflation. And then You have the inflation. So of course, you know what is an inflation, no? Yung that is basically the increase in the prices of the commodities or goods without the corresponding increase in production. Tapos yung default risk premium naman is yung premium if, let's say, the issuer is not able to pay the obligation. And then the liquidity premium, so parang to katulad din siya ng DRP, no, yung not capable of paying the obligation. And actually, itong dalawang to, yung DRP at saka yung liquidity premium, yan yung difference actually lagi ng government security at saka ng corporate security. Palaging dyan nagkakaroon ng difference, no? For a long-term corporate security at saka long-term government security. Dyan palagi. So yung maturity risk premium naman is only present if it is a long-term obligation. So ibig sabihin, kung short-term obligation siya, walang maturity risk premium. No? Kasi basically, the fluctuation of the interest, if it is already 1 year in maturity, very immaterial na siya. No? Immaterial in the sense that the rate is already, the fluctuation in the rate is already small. Okay? And then the special provision, ito yung dagdag ni Saunders naman, kasi sa book ni Brigham, hanggang dyan lang. Wala tong SP na tinatawag natin. Pero sa book ni Saunders, you have this plus the SP, which is the special provision. No? Special provision. So yung provision na yan, kumbaga special condition once they issue the funds. Okay, ito yan class, no? Parang summary. So kung makikita ninyo, yung long-term at saka yung long-term treasury at saka long-term corporate, ang difference lang nila nandito. Yan lang. Ay, dito pala, dito, sorry. Ito. No? Long-term, tsaka itong long-term treasury at long-term treasury. Ay, long-term, pareho lang pala siya. Long-term treasury at saka long-term corporate. Sorry class ha. Long-term treasury at saka long-term corporate. Makikita nyo ang difference na ito. Diba yan? Kasi dito wala. No, dito kay long-term treasury hanggang inflation premium lang at saka maturity risk premium lang. But for the long-term corporate, you also have the default risk premium and the liquidity premium. Pero kung titingnan mo rin si short-term treasury, hanggang inflation premium lang. Pero si short-term corporate, hanggang liquidity premium and default risk premium. But it has no maturity risk premium para sa parehong short-term. So basically, the difference between the government security and the corporate security, you only have the default risk premium and the liquidity premium. Yung lessons niyo sa finance, talagang pare-pareho lang actually kasi. No? Talagang may mastery lang. Kailangan lang talaga natin yung application niya. Okay, so next. So pagdating sa inflation, this is actually the average, no? Average inflation to be included dun sa R natin. So you have the R star plus the average inflation. Kaya ito, meron tayong ganitong summation of inflation. So meron T is equivalent to the time, and then yung N is the number of inflation. Kaya kung 10 yung inflation, rates na bibigay natin, 10 yun. No? Tapos divided by N, which is the 10 din. No? Okay, halimbawa natin dito. Review na rin to no? So you have the inflation premium for year 1 is 5%. Kaya kung 1-year inflation lang yung kinukuha natin, so we only have 5% here. But if you have 10, now if you have 10 years, sabi kasi dito, 5% next year, 6% of the following year, and 8%, no, yung thereafter. So kung makikita nyo, the first year is 5%, second year is 6%, and then meron siyang thereafter dito na 8%, so 8% times 8. And then you sum this, you get the sum, divided by 10, you get 7.5%. So the same thing with if you are computing for the inflation for 20 years. The 5% sa first year, 6% second year, then 8% times 18. Then divided by 20, so meaning the inflation rate for 20 years average is 7.75%. Okay, so must earn the IPs to break even versus inflation. So these IPs will permit you to earn R-star before taxes. Anyway, huwag nyo napansinin yan. But this one, right, itong mga 5%, nakikita niyo ba yung cursor ko? Anyway, yung 5%, yung 7.5 and 7.75%, yan yung i-add natin dun sa R-star natin to get the R. Kaya kung halimbawa ganito siya, kaya kung meron tayong R dito, meron tayong R-star dito, tapos plus IP. So, ganyan ang magiging formula mo. So, yung inflation na to, depende kung anong ginamit mo. Kung 1 year, 2 years, 3 years, 4 years. So, yun ang ina-add natin. Kaya kung pang 1 year lang siya, ang i-add mo, okay. Kaya kung 1 year lang siya, ito yung i-add mo. Doon sa R-star, yung 5%. But if you're computing for the interest rate for 10 years, i-add natin yung 7.5. Okay? So, ganun siya. Ito naman sa maturity risk premium. So, formula na binigay ni Brigham, it is 0.1% times T minus 1. But actually, doon sa book naman ni Saunders, sinasabi niya kung paano computein yung maturity risk premium. So again, for differentiation coming from the book of Saunders and coming from the book of Brigham, the maturity risk premium for Brigham, the computation is 0.1% times T minus 1. But in the book of Saunders, in the book of Saunders, he is specifying what or how to compute for the maturity risk premium. Kaya hindi palaging parehong ganyan din. Okay? Kaya tingnan na lang ninyo kung paano sasagutan kasi nasa sentence naman yun. Now, if the problem is silent with regard to the computation of the maturity risk premium and it is long-term, then use this formula. That is if the problem is silent. If the problem is silent, you use this formula. Maliwanag ba? Hello?
Opo. Yes, sir.
Sir, question po.
Sige.
Sir, yung previous slide po. Sir, saan galing po yung 8 and yung 18?
Kasi sabi rito, ito, IP10. IP10. Di ba?
Yes po.
Kung meron, sulat natin sa Excel, Kasi sinabi rito ay IP10. Okay? Sinabi na sa first year niya na 5%. second year is 6%. Kung ito yung 1 year, ito yung 2 years. So yung magmula 3, hanggang 10, so yun na yung 8% bale. Ganyan siya lumalabas. Starting from 3, 1, 2, 3, 4, 5, 6, 7, 8. Okay?
Yeah, okay po, sir.
Yeah. Kasi sinabi naman inflation 10 eh. Kaya ibig sabihin year 10. Year 10, ha? Year 10. Ito naman, year 20. Kaya class kung halimbawa pinakuha, halimbawa naman ha, halimbawa lang, ang pinakuha ay IP 5, halimbawa tayo. Ang computation is 5%, then 6%, then you have the 8%, no? Ganyan siya. And then you will add, dito lagay natin yung summary na. Magiging 7% yung ano, yung inflation premium. Pero dito naman, %. Kaya ko muna. $7.5. Okay, ayun din yung nakuha natin dito. Ano ba yan? Ayan, no? Nakita nyo? Nakita nyo?
Yes, sir.
Kaya kung halimbawa 10 years yan, ibang computation, 7.5. Pero kung 5 years lang yan, 7%. So kung IP7 naman to, ganyan siya, di ba? Tapos sum natin ulit. Then divided by 7. So yung average lang bali natin. Okay ba? Pareho siya. Tingnan natin ha. 2 decimal places. Yung ganyan siya lalabas. So ganyan yung pag-compute ng average inflation. Okay? Punta tayo susunod ha. Yan, tapos na tayo. Kaya dito maturity risk premium tayo ulit. So kung 1 year siya, the 0.1% times 1 minus 1, 0. Kung 10, the 0.1% times 10 minus 1. Kaya 0.9%. Pagka MRP 20 naman, 0.1% times 20 minus 1, so equivalent 1.9%. So yan yung idadagdag natin doon sa computation ng R. Get? Nakalimutan nyo na, buti na lang pala, ni-review pa natin. Di ba, tapusin natin hanggang long-term at saka short-term investments ngayon. May silang naman yun eh. Hanggang 10:30 tayo, di ba? Okay, so ganyan siya. Question?
None, sir.
Okay. May tanong pala ako, yung bang ibang faculty nyo, every schedule ninyo, may meeting kayo? Baka mamaya ako lang yung minsan meron tayong time na short period lang tayo, 1 hour, 1.5 hours. Ako yung nagkukulang. Yung ibang faculty niyo, anong ginagawa?
Sir, meeting, sir. Every time, most of the time.
In a week, for example, you will meet twice, ganon?
Yes,
Yes,
sir.
sir.
Twice a week.
Tapos they have to consume the 3 hours?
No, sir.
No,
Like
sir.
1.5 hour.
Parang ganun lang din naman, no? Pareho lang
Same
pala.
po sa inyo.
Same pala. At least pareho, no? Kasi baka mamaya ako lang yung hindi ganun. Sige, okay. But anyway, this time baka sagarin natin Kasi I want to finish also the short-term and long-term investments. So that would be for the quiz, no? Kaya yung quiz natin medyo mahaba ang coverage. From the start up to short-term and long-term investments. Pero yung short-term and long-term investments, okay, mag-alala kasi concepts lang to at saka konting-konting computation lang. Yung basic lang talaga kasi kailangan natin malaman din yan no, for the succeeding topics natin. Sige, next. Adding the premium. So, kaya tignan nyo class, di ba? Kung bawang R-star daw ay 3%, ito yung na-compute natin na inflation premium pagka year 1, yung 5%. Tapos pagka 10 years naman, 7.5, at pagka 20 years, 7.75. So, dinagdag lang natin. Dinagdag lang natin. And then this one also, yung itong 0.0%, 0.9, at saka 1.9, that is the maturity risk premium. So, dinagdag lang natin. Kaya ibig sabihin nun, yung nominal rate, which is the risk-free rate, no? Yung nominal rate, which is the risk-free rate for 1 year, will be 8%. Tapos kung for 10 years, 11.4, and then the other one is 12.65%. Okay, kaya lumalabas, ito na siya. Kaya naman tinatawag nating risk-free rate kasi you included already the inflation premium and the maturity risk premium. And this one is true only for the, again, this is only true for the government securities. So pagka corporate securities, dadagdagan natin yan. Idadagdag natin dyan yung liquidity premium at saka default risk premium. Anong WSF? Sandali lang class. Yun lang to. May seminar na naman. Ano ba yan? Sabay-sabay yung mga seminar na. Yan nakakainis. November 5, bukas yun Sandali lang class sandali lang seminar kasi ito. Kaya sabihan na naman. So ibig sabihin, ba yan? Tomorrow is November 5. Hindi ba may news na class na face-to-face na raw sa second semester, no? In January 2021, sabi ni Duterte. Nabasa niyo ba yan? Totoo ba yan? May news na bang ganun talaga?
Wala pa po ata, sir.
Hindi, nabasa ko sa news kagabi.
So, ako hindi nakabasa, sir.
January 2021. Pero ang sabi sa Miriam College, parang mag-ano pa rin tayo online. So I do not know, no? Kung may option ba ang school to not follow the instruction of the president o kaya ng CHED kung sakali, no? Pero para sigurado, maganda nga, wag muna di ba? Although mahirap mahirap talaga yung online kasi iba yung turo, lalo na next sem. Para sa akin, may subject ako na accounting research. Tapos, ewan ko, parang yung security analysis na subject ninyo sa akin din ulit. Tapos pumababaliw na yata ako. At saka sa totoo lang, class, no, pagka nagtuturo ng ganito, minsan nakapikit na kami. Dahil inaanto kaming nakaharap lang sa computer. Kaya we need actually your participation para hindi kami aantukin. Kayo rin naman, di ba? Para wag kayong antukin, you have to participate also. Kasi pareho yung pinagdadaanan natin Pareho yung pinagdadaanan natin. Pero mas mahirap actually sa faculty kasi we have to prepare everything, no? Parang yun na nga, lahat talaga piniprepare namin. Buti na lang kung halimbawa yung mga topics natin, for example dito, yung iba pare-pareho lang. Kasi talagang ganun pare-pareho lang talaga actually class. What you will learn in financial management, you will learn also in other subjects of yours. No? Kaya halimbawa yung debt markets niya, pareho lang ng bonds lang din naman mga yan, long-term liabilities. Kaya dapat class, by this time, meron na kayong mastery ng mga topics na to, di ba? Okay, anyway. May question ka? Sino may question?
Wala po, sir.
Okay, wala Mabuti na lang, mababait kayo, no? Ayan. Okay, next. Ito summarize ko na lang So the difference actually between the corporate bond yield, ito yung government security, at yung yung corporate security, ito, tapos yung government security. So government and, ano ba yan? Yung corporate at saka government. So ang difference na basically lies only on the default risk premium and the liquidity premium. Doon lang sila nagkakaiba. Okay? So default risk premium at saka liquidity premium lang sila nagkakaiba. Kaya sabi nga rito, yung corporate bond yield spread. No? Kasi yung corporate bond yield minus the treasury bond yield. So basically the difference is only the default risk premium and the liquidity premium. So dyan lang sila nagkakaiba. Okay? Yan. Okay, ako halimbawa ito. Bond rating. No, may bond rating kasi natitawag So meron tayong US Treasury which is the government security which is 1.81%. Yun ang corporate security or let's say corporate bond. Now they have to be rated, no? Rated by the credit rating company. So bibigyan sila ng rates, parang grade, kumbaga, no? Binibigyan ng grade. So for the AAA, for example, no? AAA corporate, ibig sabihin na ng credit rating niya ay mataas. So therefore the interest rate to be charged, no? For the default risk and for the liquidity is also low. Mababa siya. Kaya compared to AA at saka A, mas mababa yung 2. Mababa yung 2. Naliwanag ba yan? O kaya pagdating dito, habang bumababa ang credit rating ng company, tumataas yung interest rate niya. So kaya if you compute for the corporate bond yield, not 2% minus 1.81, that is 0.19. 2.68 minus 1.81, 0.87. Then 2.79 minus 1.81, that is 0.98. So ganun siya. Maliwanag ba?
Opo.
Yes, sir.
Okay, so ganun siya. Okay, next. Okay, Fisher effect. So, sinasabi lang naman sa Fisher effect, no, it is the relationship among the real risk-free rate and the expected rate of inflation and the nominal interest rate. So, sinasabi lang ng Fisher effect is that for you to earn, no, without losing, no, the expected inflation should be added to the R star. Yun lang naman yun. Yun lang ang sinasabi niya ng Fisher effect. That the expected inflation should be added to the R star for you to earn the R. Kasi logika kung limbawang you will invest, no, and it will give you a return of 3%. Ang inflation rate naman ay 5%. Di logika na kagad ng 2%. Diba? Kaya dapat daw, sinasabi nga ni Fisher, is to add also the inflation to the R star. So yun lang ang sinasabi niya. Kasi you are investing Kaya nga, for you to be enticed to invest, the premium should be added. Not only the inflation, but other also variables, no? That you think is applicable. Kaya nga, minsan, the demand for the interest rates, naririnig niyo ba yung motor? Nako, ingay, no? Anyway, yung mga interest rate nga natin, no? There are other variables to be added, mga premium. Kaya nga, some people, no, they demand for more because they believe that the interest rate offered to them is low, no, for them to meet the risk that you think is present, no, yung investor's perception about the risk. Kaya nag-a-ask tayo na mas mataas na return. So sa book ni Sonder, ganito lang ang presentation niya. Na si Saunders, ito yung risk-free rate plus the expected inflation premium. Tapos sa formula ni Brigham, that is R star plus the expected inflation. Dito kay Saunders nga, itong risk-free rate, dapat lumalabas yan yung R star din eh. Pero ang sinasabi niya, risk-free rate na kagad. No, dito kay Brigham, itong R star naman, hindi, kasi that is the real rate of interest. So meaning, wala pa talaga yung inflation dyan. Nandito pa lang yung inflation kay Brigham. Pero kay Saunders, ito yung sinasabi niya. But maybe he gave a different definition for the RFR na to, no? Kay Saunders. But I think this is more applicable yung nasa formula ni Brigham. Okay? Pareho lang naman siya, no? Pareho lang. Kaya lang pinakita ko rito yung difference ng presentation ni Brigham at saka ni Saunders. Since we use both the book of Brigham at saka ni Saunders. By the way, di ba may na-download kayong book na ano, no? Na isang book, ano yung book ngayon? Yung na nawawala yung book ko. Nasaan na yun? Anyway, meron tayong isang book, gagamitin din natin yun, ha? Yung na-download ninyo, gagamitin din natin yun. Buti kayo may na-download kayong book na ganun, ha? Okay, so next tayo. Ito ba na-discuss natin dati? Yung mga unbiased expectations theory nun?
No, sir.
Ayan, yan ang wala. Yan ang wala. Kasi ito kay Saunders na to. Hindi ba tayo mabot kay Saunders sa ganito?
Hindi po,
I
sir.
don't remember, sir.
Sige, tingnan natin, ha. So punta tayo sa term structure of interest rate, no? So that is the term structure of interest rate is the relationship between interest rates or bond yields, no? Between long and short-term interest rates in varying maturity dates. Kasi sinasabi ng term structure of interest rate, dapat yung, let's say you are investing in a 1-year security. Tapos you are investing also in a 2-year security. No, dapat daw, yung kikitain mo, illustrate na lang natin, ha, para mas madali. Let's say you have the 1-year security at saka meron tayong 2 years, no? Yan. So, halimbawa rito, this one is a 1-year security. And this is a 2-year security. So, itong 2-year security, pwede natin sabihin meron siyang 1 at saka pang 2. Diba? Lalabas ganyan, tapos ito 1. Kasi 1 year lang, di ba? 1 year. Pero itong si 2-year security, meron siyang 1 year, tapos another 1 year. Kumbaga, ito another 1 year. So, ganyan. Kaya parang 2. Kung sabi niya, dapat si 1-year security, pagka naglagay ka, halimbawa kumita ito ng 5%, dapat dito raw, 5% din yung kita. Ganyan, no? O kaya naman kung ito ay 7%, Pagka kumita raw nilagay mo raw siya sa, teka muna, ulit, na ako yung nalito, no? Ang sinasabi, na dapat ang kikitain mo, tama ba ako? 7, tama nga yun, no? Kung 7% siya, for 1 year security, dapat ang kitain din niya security na 2 years ang maturity, dapat 7% din ito. So, dapat yung kinikita raw ni 1 year security, the same lang sa kikitain ni 2 year security for year 1. Ngayon, halimbawa, ang rate nito for 2 years, halimbawa, for 2 years na. So, bali ito for 2 years na to, no? Halimbawa, merge natin, no? Ano ko ba yung merge to? O, halimbawa, ganyan. So, halimbawa naman, kumita raw to 9% for 2 years, no? For 2 years. For 2 years yan. So, kung yung 2 years security mo, kung 2 years security daw, will earn 9%. Tapos ikaw nag-place ka rito ng 7%, 1 year. Ngayon, kung limbawa raw, ito ipi-place mo ulit for another year. Another year. So, ibig sabihin, 1 year, 1 year to equal to 2 years security. So, kung halimbawa ang 2 years security mo, kumikita raw ng 9%, dapat ikaw, kung nag-place ka ng, let's say, 7% for 1 year, dapat, pagka itong dalawang to, tinotal mo, dapat mag-i-equal daw sa 9%. So, siguro pwede sabihin natin na yung simple ano lang. So, para mag-average siya 18. So, dapat dito raw, kumita siya ng 11% sa second year. Para mag-i-equal sa 9%. Okay? Ulitin ko Di meron tayong meron muna tayong isang security. 1 year security that will earn 7%. Tapos meron tayong isang 2 year security that will give you 9% for 2 years. Ngayon, sinasabi niya, dapat daw yung rate nito, kung ipi-place ko to for 1 year, and then we'll place again for another year, dapat raw, yung kikitain mo rito sa dalawang 1 year, dalawang 1 year, should be equal to 9%. So parang simple average lang, logic pa lang to. Dito tayo nagko-compute ng talagang computation na pinapakita ko sa inyo ay yung logic. So dapat siguro, doon sa second year niya, na 1 year security, this should earn 11%. Bakit? Kasi pagka inad natin itong dalawa, which is 18, divided by 2, 9% din siya. Which is, will equate to this one. So yun yung sinasabi niya. No? Dapat yung, it doesn't matter if you earn a placement in 1 year, at saka 2 years, dapat yung 2 years na tigwa 1 year will equal to a 2-year security. Kumbaga dito, twice ka nag-invest. No, twice ka nag-invest dyan, at dito, once ka lang nag-invest. At yung once na investment mo for 2 years will give you 9%. Kaya dapat kung twice ka nag-invest na tigwa 1 year, dapat ang kinain mo raw din ay 9%. Kaya lumalabas kung 7% yung interest mo ng first year, dapat pagdating ng second year, yung interest rate magiging 11%. So that once you average them, it will be equal to 9%. So yan yung sinasabi ng term structure of interest rate dito kay Saunders naman. So yan. So it is considered that the long-term security is indifferent to short-term security in respect to maturity. Kaya sinasabi niyang unbiased expectations theory, no? So example natin, assume that a 1-year treasury bond yields 5%. Ito 1 year pa lang while a 2-year bond yields 6.5%. So investors who want to invest in 2-year bonds has the following options. So buy 2-year bond, then hold it for 2 years. Tapos buy 1-year bond, hold it for 1 year, and then at the end of the year 1, reinvest the proceeds in another 1-year security. So, 2 beses nag-invest. Di ba? If they select strategy 1, for every peso that will invest today, they will have an accumulated of 0.134225 by the end of year 1. So, kaya ito yung rate na. Kasi yung 1.065%, teka muna yung calculator ko, sandali ah. Kaya kung makikita ninyo class, no? Meron tayong 1.065 raised to power 2. Kasi lumalabas, kinompound natin yan eh. No? Kinompound natin. So, kaya 1.065 year 2 minus 1. So, 13.4225%. Ha? Okay? So, dapat siya nakikitain mo. Kasi yung buy 2-year bond, di ba? Buy 2-year bond. So, strategy 1. Ito yon. Kung buy 2-year bond, then hold it for 2 years, so dapat kung interest rate daw ay 6.5% ng first year, tapos i-hold mo siya for 2 years, dapat ang interest rate mo dun sa 2-year bond ay 13.225%. Tama bang pagkakasabi ko? Kasi 5% yung isa, while a 2-year bond yields 6.5%. Buy 2-year bond, tapos, tama yun. No? Tama naman, no? Kasi meron tayong 2-year bond na 6.5%. So, yung sa, ano naman, doon sa pangalawa, no? Doon sa pangalawa, kasi ito, di ba, di ba sa pangalawa, ito naman, kung yung pangalawa, 2 beses mong ilalagay na tigwa 1 year. No? 2 beses mong ilalagay na tigwa 1 year. Kasi ito, syempre, kung may 2-year bond yields ka, no? Ibig sabihin nun, 1 year is 6.5, another year is 6.5. Di ba? Ganun siya. So, lumalabas, dapat ang rate na, yun nga, 1.065 yx2 minus 1. So, dapat, yun nga, 13.4225% ang kikitain mo. Ngayon, doon sa tigwa 1 year naman, na 2 beses mong ipi-place, dapat on the second year, ang interest rate nga ito. Ayan. So, this time, meron tayong 1 IR2. So, ibig sabihin, period 1, tama ba yung period 1? May subscript kasi tayo no 1 tapos R2. O tama, no? Meron tayong period 1, R2. Lumalabas kasi, place mo for period 1 with 2 years maturity. So, ganun yung pagbasa ng class, ha? Ulitin ko, ha? Meron tayong 1, R2, no? Meaning, that is, it was placed on year 1 for 2 years. So, you place that in period 1 for 2 years. Now, if you want to clarify this also, class, nasa book ni Saunders ito. Kung gusto nyo makita, ha? Kasi yung subject natin na to actually, yung investment and portfolio management, walang eksaktong libro. Kaya, kumbaga, kinuha ko yung mga topics sa iba-ibang books. Okay? So, ulitin ko, ha? For you to read this one, ibig sabihin nun, you put your placement in year 1 with 2 years maturity. Kaya 0.065, ito yun eh. Ito yun. Ha? Kaya if you placed on period 1 with 2 years maturity, ito siya. Yung formula natin is 1 plus 1R1. Bakit 1R1? Kasi if you place in 1 year, in period 1 with 1 year maturity, ang kikitain mo yung 5%. Okay, nakuha nyo? Hello?
Yes, sir.
Baka nalilito na kayo, ha? Sabagay, nakakalito to, especially the formula. So ito naman, 1R1. Bakit 1R1? Because if you place at period 1 with 1 year maturity, 5% yung interest. Ito yon. Yan yon. Ha? So tapos, meron tayong expectations dito. 1 plus expected. Expected. Bakit naman 2 years to? 2 to. Kasi ibig sabihin, if you place for another year, which is on the second year, kaya second year yan. Tapos ang placement na for 1 year. Kaya pagka binasa nyo itong mga ganito, no, yan, ulitin ko ha, yung 1R2, ibig sabihin, period 1, you place that in period 1 with 2 years maturity. Tapos ito naman, period 1 with 1 year maturity, tapos ito, period 2 with 1 year maturity. E di ibig sabihin, kung i-add natin itong dalawa, 2 years na yun. Tama ba? Hoy, nag-iisip pa.
Opo, sir. Opo.
Tama ba? Ha?
Yes, sir.
Yung iba, hindi sumasagot.
Sir, pa-restate po.
Ha? Sila,
Pa-restate. Sorry, sir.
okay, Rainelin. Sofia. Kumusta kayo? Sagot naman, sagot. At si Suki, so lagi sumasagot.
Sir,
Oh,
sir, sabi po ni Audrey, repeat raw po, sir.
ano nang i-repeat ko?
Yung
Ba't si
last
Audrey?
niyo lang po sinabi, sir.
Ha?
Yung last niyo lang po sinabi.
Hindi ko naintindihan. Ulit. Ano yung sinabi mo ulit?
Yung
Yung
last
last
part
lang
po
po.
sinabi.
Yung last part.
Opo.
Ano ang last part dito? Hindi ko alam. Sabihin nyo, anong part rito? O yung dito, o doon sa kabila? Diyan ba o dito?
Hindi po, yun lang po. Yun lang po.
Ito
Yung-
lang. Ulitin natin ha. Ulitin natin. Ang ibig sabihin ng 1R2, that is you placed in, sulat natin sa Excel para maliwanag ha. Meron tayong 1R2. Hindi ko na lang malalagay ng subscript dito, nasa Excel ha, 1R2. So ibig sabihin yan, period 1 with maturity of 2 years. Okay? So yung sinabi naman ng isa, 1R1, so period 1 with maturity of 1 year. So yan yung ibig sabihin nun. Kaya pagka sinabi naman 2R1, so that is on period 2 with maturity of 1 year. Kaya kung halimbawa itong dalawang to, inad mo, lumalabas 2 years yan. Di ba? Kumbaga, lagyan natin ng years para maintindihan nyo ha. So si 1R1 halimbawa, si 1R1. 1R2 pala yun. 1R2. Release mo siya ng 2019. Kailan magmamature yan? 2020. Ha? Yan lalabas si 1R2. Release mo ng 2019, magmamature ng 2020. So si 1R1, nasa 2019. Kasi ang sabi nga niya ay period 1 with maturity of 1 year. Kaya 2019 lang yan. Kung nag-start ng January 1 yan, mag-i-end ang January 31. Pagdating nung isa, 2R1, ibig sabihin nun, 2020 naman siya. So ibig sabihin nun, pagka nag-end sa December 31 dito, itong sa 1R1 na to, ipi-place mo siya at the start of the year ng second period ng 2020. And then we'll end at December 31, 2020. Kaya kung lumalabas, ito ay 2 years. Ito rin ay katulad nito ay 2 years. Nakuha niya?
Yes, sir.
Ha?
Opo.
Yes, sir.
Naintindihan na, Audrey?
Opo, naintindihan ko na po.
O, si Sophie. Sophie? Sophie?
Yes po.
Ba't malungkot ka na naman, Sophie? Ano ba palagi ka malungkot, Sophie, ngayon napapansin ko? Bakit ka malungkot palagi? May problema ka ba, Sophie?
Wala po.
O, sige. Okay, so kaya ganun ang ibig sabihin niya, no? Tapos meron tayong formula rito na exponent 1.5 minus 1. Okay, so doing the algebra, mas magaling kayo sa algebra sa akin actually, no? So after that, no, ibig sabihin lang yan, dapat pagdating ng second period, no, with 1 year maturity, dapat yung interest rate niya ay 8.02%. So kaya balik ko ilalagay natin dito ulit, dito lumalabas ay 6.5%, di ba? Tapos meron tayong 6.5% din dito. Ito 5%. Dapat itong sa 2R1, ang formula daw niya ay yung rate na ay 8.02%. Which is the, ito. Kaya kung i-explain natin dito sa Excel, ganyan lumalabas class. Kung si IR2, kikita ng 6.5% ng 2019, kikita ng 6.5% ng 2020. Itong tigwa 1 year period, kung binigyan ka ng 5% sa 2019, dapat pagka nag-place ka ng 2020, 8.02% na yung kikitain mo. Yun nga lang, hindi siya yung simple average. Kasi itong average nito, 6.5% eh. Tama, 6.5%. Pagka inad natin siya, 13%. Pero ang computation natin is 13.42. Bakit naging 13.42? Kasi compounded. Diba? Compounded ang formula niya. Compounded siya. Compounded. Kaya lumalabas na instead na 13% lang, nagiging 13.4225% because it is compounded interest. Okay? So, ganun yung ibig sabihin ni unbiased expectations theory. Kaya sinasabi niya indifferent. Whether you place in a 5-year security or you placed in a security that matures in 1 year but you place it for 5 years, dapat yung kikitain mo pareho lang. Naliwanag ba?
Opo, sir.
Okay, so maliwanag yun Okay,
Yes, sir.
so punta tayo sa susunod. Okay, liquidity premium tayo, no? So the long-term security will always have a higher interest rate than the short-term security because of the presence of the liquidity premium, no? So this theory considers that the longer the maturity of the financial security, the higher liquidity premium should be given. So para siyang katulad din ng maturity risk premium, no? Habang tumatagal, dapat yung premium daw ay tumataas. Okay? So ganun lumalabas siya. So habang daw tumatagal sa liquidity premium, habang tumatagal yung maturity, tumataas yung liquidity premium natin. Parang katulad nga siya ng maturity risk premium. Maliwanag ba? Okay, so example tayo rito. Ito, nako, daming formula, no? Class?
Opo.
Present.
Opo, medyo madami, sir.
No, kaya nga ang hirap ng finance. Alam niyo ba, hindi lang kayong nahihirapan, kahit ako, nahihirapan din ako. Kasi kailangan kong intindihin ng gusto yung mga problems na yan. Kailangan ko intindihin ng gusto yung mga theories na yan. Kaya kung kayo nag-aaral kayo, halimbawa, especially if the subject is new to us, hindi po pwedeng mas marunong kayo kaysa sa amin. Dapat mas marunong kami kaysa sa inyo. Kasi kung kayo ang mas marunong sa amin, hindi dapat kami ang magtuturo sa inyo. Kayo ang magturo sa amin, di ba? Kaya dapat kami yung mas marunong. Kaya, naku, Diyos ko po, sa totoo lang, no? And not to brag also, Diyos ko sa UST. Ewan ko, yung mga estudyante ko, laging section 1 din sa financial market at saka financial management. Yang gagaling. Ang tataas ng grades. Grabe. Ang hirap ng exam na pero ang tataas ng grades. Kaya ako naman, aral na aral tuloy. Aral na aral ako dahil kung hindi, mapapaya ako sa kanila. Hindi ko naman alam ba't ako yung nilalagay nila ron. Siguro nga, isip kasi na may libro ako. Ganun, no? Pero mahirap. Mahirap class actually. Kung kayo nahirapan, mas doble ang hirap ng faculty sa totoo lang, no? Kasi we have to learn everything. At saka pagka nagtanong kayo, dapat masagot namin yung tanong ninyo. Minsan ang tanong, wala sa libro. Ako madalas natatanong ako ng wala sa libro. Kaya I have to answer them also. Pero pagka hindi ko alam, hindi ako magmamarunong. Sasabihin ko, titingnan ko kung paano yan i-research ko. No? Ganon. Anyway, so ito tayo sa liquidity premium. Now for the liquidity premium theory, so meron tayong ABC capital forecasted that the 1-year treasury bill rates and liquidity premiums for the next 4 years are expected to be as follows. So meron tayo ulit na 1R1. 5.6%. But this time we have the liquidity na 0.06%. Liquidity for year 3, 0.08. Liquidity for 0.10%. Okay? So dito meron tayong expected rate for period 2 with 1-year maturity na 6.7%. Period 3 with 1-year security, 1-year period, 6.80%. And then the expected rate on year 4 with 1-year maturity, 7.20%. Kaya dapat talaga, class, gagawa kayo ng sarili ng sistema. Hindi po pwedeng magre-rely kayo sa sistema ng faculty, no? So you may also develop your own system. Kung babasahin mo to, parang sinasabi lang yan, ito ang interest rate ng 2019 na halimbawa, ito 2020, ito 2021, ito 2022. Kasi sinasabi naman niya, tigwa 1-year period lang naman yan eh. So ito ibig sabihin, year 1, year 2, year 3, year 4. Diba? Ganun lang yon. Kaya lang itong si Saunders kasi kung ano-anong formulang pinapakita pwede naman i-simplify yung formula, no? Pero tama naman kasi yon, expected kasi, no? Expected. But actually, you can show this, let's say the year is 2019. Ibig sabihin lang noon, ito yung 2020, ito yung 2021, ito yung 2022. So this is the expected rate for 2020, 2021, 2022. If this is the actual rate for 2019. Ganun lang yung ibig sabihin niyan. Kaya lang pinapakita ko sa expected rate na merong mga formula na ganyan, mga Chinese na may 2R1 no? Na pinapahirapan lang tayo. Pero actually, parang continuous year lang yan. Okay, so paano natin makukompute yung ito bale? Kasi ang hinahanap natin yung interest rate for 1 year with 2-year periods. 1 year, ibig sabihin, period 1 with 1-year maturity yan, di ba? Tapos ito, period 1 with 2 years maturity, period 1 with 3 years maturity, and period 1 with 4 years maturity. Di ba? Ganun siya. So, ibig sabihin, if the interest rate for 1 year, no, with 1 year, on period 1 with 1-year maturity is 5.6%, dapat yung period 1 with 2 years maturity, ang interest rate daw na dapat ay 6.1784. So paano nakuha? So you have the 1.060, ito yon kasi year 1 yan lumalabas. Tapos dito meron tayong year 2 because we have the expected 6.7, so 1.0670 plus 0.0006, which is the liquidity premium. Tapos 1 divided by 2 minus 1. So we have the exponent, ha? So makukuha natin ay 6.1784. Now, if it is on period 1 with 3 years maturity, so makikita nyo, meron tayong 1.060. So ulit yon for the period 2. Ito naman yung kukunin mo. No, yung 1.670 plus 0.006. And then the third one is the 1.0680 plus 0.0008. Then this time, the exponent is 1/3 kasi 1 year. 1 year kasi 3 years. And then minus 1. And then you get 6.4112%. Ha? Tapos yung 1R4 naman, gano'n na rin, no? Ito. Tapos kukunin mo ito, yung pangalawa. Tapos itong pangatlo. And then yung pang-apat. Yan, no? Ayaw kasi mag-highlight eh, no? Yan. Basta ito yung mga yon, na? Kasi naka-PDF yata itong ginawa ko, kaya ganun. Dapat PowerPoint lang siya. Kaya ayaw mag-highlight masyado. Okay, makukuha nyo rito, yung 1.560, ayun. Yung second year, ito, galing dito. Yung 1.0680, nandito nang galing sa third year, no? Tapos yung last, nandito sa last din dito. Then minus 1, so 6.6331%. Kaya ibig sabihin lang doon, sa yung since ang interest rate daw ay 5.6% for period 1 with 1 year maturity, dapat yung 2 years maturity, ang interest rate daw niya ay 6.1784. Doon sa 3 years maturity o 3 year maturity, 6.4112. At 4 year maturity is 6.6331%. So, ganun siya. Claire?
Opo.
Clear,
Okay.
sir.
Okay,
Yes,
market
sir.
application theory tayo ngayon. Ay, madami pa. Diyos ko po, kaya nyo pa ba? Ha?
Yes, sir.
Okay, market segmentation theory
Naka-record
tayo, ha? Kasi dito, to explain also, no, yung liquidity premium theory, kasi sinasabi ni ng theory na to, nag-fail daw yung si unbiased expectations theory. No? Ang failure daw ni unbiased expectations theory is that he did not consider the number of years. Nako, sandali, may nagtatanong. Sandali, Sandali lang, class, ha?
Okay lang po, sir.
Okay, sir.
Kasi naman, alam mo, sa totoo ng class, yung mga boss ko, yung iba, pagka nag-i-invest rin sa stocks, akong tanungan. Buti pa pero actually, yung mga binibigyan ko ng advice class, kumikita. Ako, na nagbibigay ng advice, nalulugi. Ewan ko ba't ganon. Anyway, yan, balik tayo rito, ha? Yun na nga, pagdating sa advice expectations theory kasi, sinasabi na yung long term at saka short term, indifferent when it comes to interest rate, di ba? Pero sinasabi kasi ni liquidity premium theory, hindi, mali ka. Nag-fail ka ron. Kasi dapat, pagka mas mahaba yung period of placement, dapat may sinasabi na liquidity premium. No, kaya kung, nako, tumawag na po. Sandali lang, sandali lang. Sorry, class, ha?
It's okay, sir.
Hello? Hello, class.
Hello, sir.
Pasensya na kayo ha, Call of Duty.
Okay lang, sir.
Okay lang
Pasensya
po,
na kayo.
sir.
Call of Duty yon, Call of Duty, sorry ha. So, nasa na nga ako. Pagdating nga kay liquidity premium theory, sinasabi niya na mali naman to si unbiased expectations theory. Kasi, maaaring tama ka, sabi ng gano'n na indifferent si short term kay long term. Pero, you did not consider, sabi ng gano'n, or you did not consider the period covered. So, dapat mas matagal siya, dapat mas mataas yung interest rate because of the liquidity premium. So, sinasabi niya, as the securities maturity becomes longer, the liquidity premium should be higher. So, yun ang sinasabi niya kay unbiased expectations theory na dapat dinagdagan mo ganito. No? Parang ganon. So, pagdating dito kay market segmentation theory na naman ito, inanon ulit, kinriticize niya si liquidity premium theory at saka si unbiased expectations theory. Kasi this time, dapat segmentize din yan. Kasi yung tinitingnan nyo lang daw, sabi ganon, yung indifference ng interest rate at saka yung liquidity premium. But you also have to look at the different sectors, sabi nila, yung different economic sectors, ito nasa last paragraph, that they have their own preferred maturities depending on their respective needs. So yun naman ang sinasabi ng market segmentation theory. Kaya yung computation natin, that would now depend on the maturity. Kaya parang lalabas, nandun din siya sa computation ng dalawa. No? In between na siya. Okay? Preference lang ang sinasabi na rito. No? Preferences in terms of maturity. Okay? Okay, implied forward rates. So a forward rate is an expected rate on a short-term security that is to be originated at some point in the future. So the 1-year forward rate for any year, n years into the future is, no? So yan yung formula, no? So meron N, F1. So ibig sabihin yan, forward rate yan for 1 year. At tapos ito yung period 1 with maturity of N. So 1 year or ano. Tapos ito, minus 1 lang naman. So, ibig sabihin, kung ito ay 2020, itong part na nasa itaas, yung numerator, ibig sabihin itong nasa baba, 2019, no? Tapos minus 1. So, ganun lang siya. So, example tayo ngayon. So, we have March 1, 2020, the existing or current spot 1 year, 2 year, 3 year, and 4 year zero coupon treasury security rates were as follows. So, meron tayong 1R1, 1R2, 1R3, and then 1R4, no? So using the unbiased expectations theory, 1 year forward rates on zero coupon treasury bonds for 2, 3, and 4 as of March 1, 2020 were. So ibig sabihin nun, i-divide lang natin. No? Kaya kung meron tayong period, lalabas period 2 with 1 year maturity, so we have 1774 raised to power 2 kasi 2 years siya, di ba, lumalabas, compounded. So, ibig sabihin yung year 1, year 2, ang rate na ay 0.774%. Kaya kinocompound natin ng 2 years. So, divided by 1.0053, ito naman. And then minus 1. So, ibig sabihin, ang forward rate dapat daw ay 0.995%. Now, if you place for on period 3 with 1 year maturity, meron tayong 1.0095. Ito naman yon. Then raised to power 3 because compounded siya for 3 years, di ba? So, divided by 1.00774 raised to power 2, then minus 1. So, yung ito naman yun, no? Yung period 1 with 2 years maturity, then minus 1. So, you have 1.012% for the forward rate. And then for the 4 year naman, ganun din, no? Kukunin lang natin yung 4 years, then raised to the power 4, then divided by the raised to the power 3 minus 1. So the forward rate should be 2.405%. Nakuha nyo, class? Ito, mas madali lang naman yung formula, di ba?
Opo.
Yes, sir.
Yan alam nyo, sa totoo lang class, ako, hirap ako dyan. Kasi hindi man ako mathematician eh. Accountant ako. Ang dapat na magagaling dito yung mga Indians magagaling, ha? Suki, ha? Magagaling sa math, ha? Si Ashi dapat magaling din sa numbers to. Indian ka, di ba, Ashi?
Yes, sir. Indian po.
Mga Indians magagaling sa math. Actually, sila nga may record ng pinakamagaling, no? Pinakamatalas ng memory. Ha? Tsaka mga Chinese, no? Tsaka mga Chinese. Okay, so next. Wala na yata next. Tapos na pala. Yan na class, ha? So anyway, this one was already uploaded. So, continue tayo, class. Tapusin natin yung short-term and long-term interest rates. Okay? Pero pwede bang mag-rest lang tayo ng 10 minutes? Para sa inyo rin na walang overload sa part ninyo, ha?
Okay po.
Yes, sir.
Okay, so mga 10 or 15 minutes lang. Sandali lang naman yun eh. Total hanggang 11:30 tayo. So saglit lang yun, ha? So siguro mga 15 to 20 minutes, ganyan. O kaya mag-usap lang tayo mga 10:45. 10:45 balik kayo. Ha?
Okay po.
Okay, sir.
Okay. Stop ko
Yes.
muna yung recording, ha?
Okay, sir.
Yes, sir.